Good afternoon. Time to have a look at what's happening on the market side. Starting off with things on the Asia Pacific side of things. Markets mixed on that front as China and of course investors digest the export figures that came out of China, coming in a little bit higher than expected, with imports slightly lower, 0.1% lower. Nonetheless, from an indices point of view, we did see that mixed picture where the Shanghai Composite down about 0.8%, Hang Seng Index up 1.6%, and of course the Japanese on that side of things up 1.9%. The UK markets, European markets that is, a little bit muted as the UK inflation came in at 7%. It's a 30-year high, higher than expected. Of course, investors are digesting US CPI figures which came out yesterday, 8.5% versus the consensus of 8.4%. What has been the talking point is what we have seen in terms of the core inflation. That, of course, is stripping out volatile items such as food and energy prices. It came in at around 6.5% year on year versus 6.6. However, it's the month-on-month figures that has investors wondering whether we may have reached the peak when it comes to the surge in inflation that we have seen over the past 6 months. And that's the question we're going to try and answer in this conversation. Have we reached the peak yet? And we're going to have that conversation with Carmen Pelwana, who is from Absa Asset Management. Carmen, thank you so much for your time. Given the mixed performance that we're seeing, from the Asian markets, a muted performance from European markets, how is our JSE handling this influx of news, especially that US CPI figure?
Yeah, it's been a negative day once again, unfortunately, largely driven by the decline in the banks index as well as retailers. We see the resources index up today. It seems to be that the market has taken it in its stride. However, I think that the overriding factor remains the negative talks or the lack of positive talks between Ukraine and Russia. So I think that at this point has been more concerning for the market.
There was a lot of news that came out on SENS this morning. We had an announcement out of Mr. Price saying that they're going to be taking a 70% stake in Studio 88, which has the likes of Skipper Bar, John Craig, etc. What's your assessment of this particular acquisition? Is it a nice fit for Mr. Price?
So we'll start with what the market thought. Mr. Price is up over 5% today. So clearly the market is really liking it. In terms of the fit, we know that they've just come off the back of the acquisition of Power Fashion #1. And then they've got organic growth that they've had in terms of introducing new brands, etc. However, they haven't been able to tap into the men's market as yet. And I think that this is a great introduction for them. Over 700 stores. So in total, this would make Mr. Price Group a balance of over 2,400 stores nationally, #1. It's cash accretive from the beginning, which has been one of the key points for Mr. Price. Is looking at Yuppiechef as well, is focused on, we've got a strong balance sheet. How do we disseminate this money for the benefit of our shareholders? They've got the value offering. They're adding this in terms of stores that are going to probably be the second largest brand in terms of the group. So I definitely think it's something to be very interested about. It is safe. It is in South Africa as opposed to going offshore, which investors don't particularly like, especially under the current environment. So I think that it's going to be very interesting to look at. In terms of valuation, I'm coming in at a level of about 7.2 times EV/EBITDA compared to Mr. Price's current trading value, which is above 8 times. So a little bit better than in terms of pricing. Going to be a full cash deal, which Mr. Price can handle in terms of their strong balance sheet. So all in all, it looks to be positive.
We have US earnings season that is kicking off. What are you going to be looking out for in this environment of hot inflation?
So it's so volatile, and I think the key thing and the key factor that's going to be an overriding factor is definitely going to be uncertainty. We don't know how inflation is going to impact margins. And more importantly, we don't know how these companies have reacted to the Ukrainian war. So it'll be very, very enlightening to see. I would hazard a guess and say you're going to see some extremes across different sectors. So extreme positives, but also extreme negatives. Definitely the commodity prices are going to have a negative impact on a lot of companies as well as supply chain issues. So I don't have a definitive answer, but I will say that it's something that everyone's looking closely at with bated breath.
Something else that people are looking closely at is those U.S. inflation numbers, as I alluded to in my intro, that core number coming in slightly lower. And I suppose making people wonder whether we have reached the peak of U.S. inflation. What other signals would you be looking out for to make that a convincing argument?
Well, I think one thing that definitely gives credence to that argument is looking at energy prices specifically. You know, if they keep tracking sort of sideways as opposed to going up further, then we stand in good stead. As you've mentioned, headline CPI was largely driven by energy price increases as well as food prices. However, on the core CPI, as you've said, it looks to be languishing in terms of the increase. And in some cases, as you've said, month on month, we've actually seen a decrease. So definitely a positive there in terms of the way forward. However, I don't think it's going to impact what the Fed is going to do next month. Likely still to get a 50 bips increase, but it's about what do we expect over the next 12 months? Do we expect the full 270 bips? Or if we have reached a peak in inflation, we might see less than that.
Carmen, thank you so much for chatting to us and giving us your perspective in terms of what is happening when it comes to market dynamics. We did, of course, have news out of EOH as well, releasing their interim figures, managing to report an interim profit that rose, even though that their interest payments were a little bit higher, 67 million rand. But they also managed to say that they've had some agreement with the funders in order for them to push back their revolving facility, they bridging facility of 1.2 billion rand by 6 months. So we'll keep an eye on that. We're going to take a quick break. When we come back,